Hello everyone, thank you very much for joining our webinar today. On the line today we have Gary Vasey, Managing Partner of ComTech Advisory, and Ganesh Natarajan, Managing Director of Enuit Europe. Before we get started, I'd like to do just a little bit of housekeeping. You'll notice that all of your microphones are on mute. They will be on mute for the duration of the webinar. We will have a Q&A section at the end for about 5 or 10 minutes. If you do have any questions, please feel free to type them in the questions section and we'll get to them. If we don't get to them, we'll certainly respond to you via email. That said, I'm going to hand over to Gary Vasey. Gary, over to you.
Thanks, Mark. Yeah, cheers. Hello, everybody. So I'm going to kick it off with a bit of an overview of CTRM for metals. We do a market sizing study every couple of years. And the market for metals we have as the third largest, so it's behind energy and ags and softs. We don't see it growing as aggressively or as fast as ags and softs or energy. So it is the smallest and it's probably destined to remain the smallest. We estimate the market, and this is including software licenses, fees, implementation, also internal development. We estimate it globally about $174 million in 2019, and that includes all aspects of metals, so base metals, ores and concentrates, and precious metals as well. And it's been a relatively small niche market for many, many years. It probably even predates energy in terms of having CTRM solutions for metals around for nigh on 30 years probably. So it's been around a long time, and it was relatively underserved by both CTRM and commodity management vendors. There was quite limited choice. There was really just a couple of three platforms out there and a recognized industry leader that had led in metals for many years and had basically made their entire business, founded their business on their metals expertise. But things over the last 2 to 3, 4 years have changed significantly. And if you've been tracking my writings around metals on CTRMcenter.com, you will know that there are at least another half dozen to maybe 8 or 9 solutions on the marketplace these days. So buyers of CTRM or CM solutions for metals now have significant choice over what they used to have even just 2 or 3 years ago. And I think this is tremendous. And that choice really extends into the most complex markets. So there are many more solutions for, say, concentrates and minerals and ores on the market than there used to be. And as all of us know on this call, that's a very complex set of functionality with some very specific functionality that's required to cater for pricing and contracts and so on and so forth, assays, that kind of thing, hedging, everything in that market. And we've also seen generally in commodities, but specifically in metals, that the supply chain has become more important. So as margins have reduced on the trading side, and they've reduced considerably over the last several years, the supply chain has become much more important in terms of managing the risk and the exposures along the supply chain, in terms of operational risk, document management, that kind of thing, because any penalty or any fine or delay could erode any profit that had been accrued because of the trade. So some of the users that we see today are looking for more of a commodity management solution, which incorporates more of the supply chain functionality than does a CTRM. And just to step back a little bit, we at ComTech define CTRM as a true trading and risk management app, in the sense that it doesn't have the supply chain necessarily at all represented in the functionality. It's more deal capture, portfolio management, risk management, invoices, that kind of thing. Whereas a commodity management solution is more of the ERP supply chain side, encroaching into the CTRM side. The older solutions that exist in this segment, including those that were built internally, are aging, and a replacement market has developed. And replacement markets are somewhat new in CTRM, to be honest, because even in the past, when vendors spectacularly failed to do a very good job of supporting a solution, or they were acquired and the solution was end of lifed, people had spent so much money, time, and effort on maintaining that solution internally that they didn't want to actually go ahead and replace it, but would rather kind of take it on as a customized solution. These days, we are seeing true replacement markets being developed across all commodities, but particularly in metals and particularly in and around ores and concentrates, for example. And examples of issues around legacy solutions are things like front end is built in Power Builder. Power Builder is no longer supported. There are no longer adequate resources available in the marketplace, and those resources that still exist are aging, like myself, and are more expensive than you would like to pay. So there's a lot of issues around legacy technology as well as legacy functionality. And we have also seen a tremendous movement in terms of technology. So some of these newer solutions that have come to market are cloud-enabled, web-enabled, graphic user interfaces, embedded workflow, all kinds of functionality embedded in those solutions that people are looking for, with much better connectivity, much cheaper to put in, much cheaper to support, much cheaper to maintain over time, and often offered on a sort of software as a service basis. So you're paying an all-in monthly or quarterly fee as opposed to a huge upfront license fee and then all the other costs that go along with it. We still do see some tier one entities looking to try to build internally, despite the fact that there has been a growth in choice in commercially available packages. And I suspect we always will see some of the larger entities try to build their own. But as we move towards ecosystems and microservices, some of those internal builds might actually be around externally purchased pieces of software and kind of a put together homegrown solution. We've seen a lot of changes generally in commodities and a lot of challenges facing commodity players wherever they are in the supply chain. And of course, just recently, the virus lockdown and the situation globally has only accentuated those challenges, making remote home-based working the thing that most people have to do. And some people have had challenges with their solutions making that happen. Going to move to the next slide. There we go. So if we just look at some of those general challenges, things like rapidly business changing environments and priorities, the smaller trading margins and profitability that I already mentioned, the fact that it's part of the efficiency and optimization that's being put in place is about being faster with more automation and more collaboration. So reducing paperwork, reducing points of contact, that kind of thing through workflow and automated workflow and even artificial intelligence. There's much more data available everywhere of all kinds and types, not just sort of numeric data, but photographic data, sound data, all kinds of types of data is being used now in the commodities industry to help with predictions of various types. People are looking at optimizing and improving the supply chains and optimizing asset value via improved operational performance. There's a lot of increased political risks and uncertainty, as I think we're all probably well aware. All kinds of trade wars and trade tariffs and embargoes and so on and so forth. There's been an increase in regulation, and not just regulation, overt regulation, but also in terms of lending banks looking for more rigorous risk management. So looking at how you do things in order to lend you money at a reasonable rate. And there's an increased emphasis on managing all forms of risk. And what that's translated into is the trends that we see today around digitalization and automation to reduce costs and increase efficiencies. And CTRM for any commodities player is a key aspect of a digitalization project and must deliver some automation, cost reduction, and increased efficiency in the future. People are looking at lower cost and more agile solutions in order to keep those margins up and also be able to respond to business changes. Much more emphasis on data and extracting business opportunity and value. How can we look at data? How can we play with data? How can we visualize data? How can we consume data faster and make decisions? Looking to disaggregate monolithic solutions, these massive million-line spaghetti code type CTRM solutions from the past, and try to break them down into more manageable bite-sized chunks. and also even disaggregate some of the more complex business processes where it makes sense. There's an increased emphasis on asset optimization software. We're also seeing a broad movement to put up consortia and try to enhance trust and collaboration, often using blockchain. There's more focus on supply chains and sourcing. COVID-19 has disrupted supply chains at times and will continue to do so, and alternative sourcing is an issue for many. And there's an increased focus on risk management functionality. In terms of recent developments, a lot of users have discovered that their current solutions don't necessarily deliver everything that's needed when it comes to the lockdown and the impacts of the lockdown. So being not able to support secure and available remote access for the workforce, not being able to support workflow automation, approvals, and the flow documentation. So, for example, I heard of one instance where everybody was happily working at home, but there was only one fax machine and it was in the office, and someone had to go to the office and use that fax machine. That was a problem. Unable to really help the users to identify new risks in the supply chain, look at alternate sourcing and other supply chain operational issues, or they require some form of manual intervention like the fax machine example, or there's use of risky spreadsheets for critical business information that can't be readily shared between home-based employees, unable to support remote teamwork. This seems to be one of the bigger issues, is that people can get along quite well often in a home-based environment, but they miss the opportunity to talk and communicate with their peer group. And it's been at times harder to obtain proper vendor support, as the vendors have struggled to adapt to this new environment as well, sorry. And these issues are magnified for commodities where the supply chain is long and complex and open to disruption, like some of the metal supply chain. So what we're seeing is this replacement market is beginning to explode because many are now reviewing their options, looking at alternative solutions, and really looking at how they can modernize their business, maybe as part of an overall digitalization project, maybe just in terms of trying to solve some of the issues we've just talked about. But certainly they are noting that their current CTRM or commodity management solution isn't very supportive of digitalization. So we also see the buyer needs are changing. We do a vendor perception study every couple of years, and we ask questions about leadership, but we also ask questions about functions and features that buyers might see as important when procuring software. And we've been doing this for quite some time, well over 16 years, in fact. So we have a lot of historical information with which we can compare current information. The vendor perception study is a backward-looking study by design. It's asking, who do you know, who's the leader, what do you see as important when you're buying systems, etc. And the latest one, I'm actually busy doing the analysis right now. It's going to take a long time because we got a lot of good respondents. We will publish in late summer, but the early results do show a few things that we can talk about already. And I wrote a blog article about this today on CTRM Center. Supplied by a top vendor is now the least desired attribute amongst all of the buying criteria that we've been testing over that 16 years. And that's really interesting because it's always been a middle-ranked sort of attribute or buying criteria. And we've all heard that, choosing SAP or whatever is the safe choice because they're big. But it seems that with what's been happening in the CTRM marketplace with a merger and acquisition and the emergence of a couple of three very, very large all-encompassing vendors, supplied by a top vendor is now not such a desirable attribute. And in fact, I think people are looking for more choice, and that's benefiting the whole vendor community as a result. We also see that some of the other criteria have become less or more important. So things like multi-commodity, credit risk, regulatory functionality, and risk analytics, advanced risk analytics, have become more important, which if we consider what I just talked about, that's not such a surprise. Whereas quality vendor support, the overall price, technical architecture, and the need for a personalizable user interface have all decreased in importance. So it seems to me that functionality is again being valued over bells and whistles. That basically is the idea, look, you know, we need a solution that actually meets the requirements of the functional requirements of our business and can support us, as opposed to something that's got that's either cheap or is, you know, the latest and greatest technical architecture or has a fancy user interface. And this is basically translating into quite a change in how buyers buy software or choose software. I think it's also going to translate into a change in how buyers buy software, as we see perhaps less of the old RFP, RFI, 12-month-long processes being replaced perhaps by trial over the internet, and actually getting on the system and looking at it with the vendor breathing down your shoulder to help you through the process. Why can't I make it move? There we go. If you do find yourself in a situation where you're looking at your legacy software and thinking to yourself, you know what, this isn't helpful, this isn't helping us with our business, it's making it more expensive and more difficult to transition and become agile. It's a risk to us if the lockdown continues or comes back again in the fall. Then you can find a lot of information about other solutions in the marketplace. And the ComTech and CTRM Center is probably one of the places I'd recommend you first stop. Not that I'm singing my own praises, but this is what we do for a living. So we count more than 30 vendors of CTRM or CRM solutions for metals now. That's 30. More than 40% of those offer also comprehensive coverage of ores, minerals, and concentrates. And you can also find these vendors either by doing a Google search, by looking in our solution directory, which the URL is there, and it's completely searchable alphabetically, or you can focus in on a particular set of functionality. So you can say, I'm interested in metals, commodities, CTRM, or you can even say, I'm interested in concentrates, CTRM, and narrow the focus of the directory down to just those entries. There's a thing that we do called the CTRM sourcebook that we're going to issue a new version of very shortly. That's a free download on CTRM Center. And this is a listing of a subset of vendors with some quite detailed overviews of their functionality, their current geographic and customer coverage. And you can contact us anytime by email or phone. We are vendor agnostic analysts, and that's what we like to do, is help people figure their way through this market. That's what we're there for. Many of the solutions are available in the cloud, and so as I said, getting a demonstration or even a proof of concept should be much simpler than it used to be. Well, replacement is a long topic, and I could probably talk all afternoon about it, but I know that Ganesh is going to talk about it as well, so I'll keep my comments to a fairly limited subset. What we've seen historically is that it's never easy to replace a solution. As I said earlier on, if you spent millions of dollars in time and effort and have developed a set of expertise and customized add-ons, et cetera, then it's really quite a daunting undertaking to throw out the current solution and go back into the market. But with all the new technologies, technical architectures, cloud, we're seeing now implementations done in significantly less time with significantly less risk and less cost. We're also seeing different approaches to implementation where the basic system is up and running in a matter of weeks or months, and then you switch on different aspects of the system to increase the complexity through time, which means that you can get on with using the solution for at least some of the business from day one. And even under lockdown, many of the vendors in this space can go through the sales process and even implement the solution remotely. So that's not a problem either. Most of the vendors are going to offer a pay-as-you-go structure, usage fees, meaning that you don't have that massive license fee and then implementation cost and then support and maintenance, but rather an ongoing operational expense that you can manage and you can tailor as you grow or don't through time. And most of the modern solutions will provide you a solution that can help you safely and securely operate your business under lockdown conditions now and into the future, with things like workflow approvals, document management, significant audit trailing, and much, much more. So those are some of the things that I wanted to say. Again, my name's Gary Michael Vasey. My email address and telephone number is in front of you. If you do want to reach out and ask any questions after this event, please do so. And at this point, I'll hand over to Ganesh, who will drive into some more detail on Enuit's replacement approach. Ganesh.
Thank you so much, Gary. Hi, everybody. Just want to check you guys can see my screen.
Ganesh, we can see it in presenting mode. You can make it full screen.
I'll make it full screen. Give me a second. Okay. Just have multiple screens down here, so sorry about that, but I'm good to go. You can see that fully right now?
Yes, we can. Thank you.
Great. Thank you so much, everybody. I think Gary was, thank you so much, Gary, for insights around the impact on the COVID and what can be daunting about the CTRM replacements. My name is Ganesh. I head up Enuit's European operations, and I'm just going to talk to you about a few things on the CTRM replacements and trying to present to you a kind of a case study of what worked for us when we are actually working on a replacement strategy. So I think Gary has given me a very interesting insights to talk about, right? It is going to be a daunting task. It has actually been a daunting task, but most of the times what happens in the CTRM replacement part would be is like, people have gone through a motion of either building their own platform, which actually works for them from the business standpoint, or they have actually had a third party's commercial off-the-shelf product, which was actually fit for purpose once upon a time, but it's actually having a lot more issues in terms of scalability or vendor being out of support or vendor being consolidated. There are various reasons why people look into the CTRM replacement part. But the main thing, which is have to be very clear about when you're looking at the CTRM replacement, is you got to measure twice and cut once. What I mean by that is like, it's very easy to make a decision of, okay, let's replace the software or let's replace the platform. But it's very important to understand what factors actually we need to overcome. So there are a few things which we learned by doing a replacement approach while I'm with Enuit. Is most of the businesses goes through this couple of hurdles. One is, even though people know that CTRM replacement is the right thing to do because of various reasons, and a lot of times it gets prohibited by actually, as Gary said, the amount of time and investment which has been made into the system, which is the sunk cost. And the fear of change again, hey, what if it goes wrong? And then, we actually made that first project work, or we spend a lot of time on building a legacy capabilities. And the last part, the next one would be the cost of training and the business and the IT. So at this time, you actually have a system which is working, and you have a business to run business as usual, and you're going to try to come up with an implementation or a replacement project, which could be extremely daunting when you don't plan it properly. And the last one, which is very, very crucial, is data conversion and data migration, because every business data is defragmented, completely in a different shape or format. And then when you're trying to look into the system, you just need to make sure that all of them comes into the system correctly. So all of these factors, actually, I want to build upon what Gary said, is actually going to cause some of the reluctance or the pain if you don't plan properly as a part of a replacement. So I would like to actually talk about one of the real case studies we did, and then what actually worked for that client, and then what actually Enuit brought to the table. It's just basically more of a discussion at this point in time. More than happy to talk you through, guys. So the client what I'm talking about actually is a global trading business, which is specialized in both concentrates, iron ore, ferrous and non-ferrous metals. So these guys had a variety of platforms. Some of them are Excel sheets, some of them are in-house. They also had a combination of a third-party commercial off-the-shelf solution, which is actually just does mark-to-market. So trade capture is a legacy system, mark-to-market is a different system. They have an SAP integration. And over a period of time, as I said, the previous factors like sunk cost, the investment into the system, and it has been growing, the pain has been growing for a very long time. And finally, when it comes to the place, they actually said, okay, great, okay, what are the key pain points we are going through? So the business actually looked at their current operational capabilities and looked at there is a large amount of manual effort, especially in the scheduling and operations, and lots of interfaces has been built around to support in a very different format. So there is a third-party product which was running their RPAs. There is some Excel sheet macros, and there are some lot of plumbing done into the legacy system, which is actually creating them a lot of inconsistent information, and people are not able to get the information on time. So they came to Enuit and said, what do you guys can do it? And then they were very clear with us. So they said, like, Ganesh, this is not a re-implementation for us. We want to approach with a replacement. So what do you actually recommend? So we looked at the case, and then we actually trying to figure out, is it a process redesign, or you want a new system, or how are you appraising the replacement angle? So we completely realized that they are not, they are trying to replace their existing landscape with Enuit's N-Trade product, but at the same time, they really want to actually get quick wins. As Gary said, right, you can actually get something done, and then they want to see it working and then start adding more capabilities into the replacement project. So we just very clearly said to them, the best way to do that is a prototype based approach. So we didn't go through this classic way of looking at and creating a huge amount of documentation. We said, okay, great, we would like to understand your business. The best way to understand your business is actually create a test portfolio and gather your unique trades and understand what your pricing looks like. What do you do? What kind of, this is the metals client I'm talking about, what kind of grade, shape, and quality you are currently looking at. And we started building that together with the basic set of reference data and started prototyping the solution or the replacement strategy. Of course, we had a guideline scope and guideline requirements. The normal project nuances existed, but we basically started the entire portfolio with the test portfolio approach. We actually picked up their live trades, picked up the associated data. We basically started modeling their live business from day one to the extent possible, and all the way through started the ETRM replacement project. It gave us a lot of good benefits. Number one, it actually helped us to fail faster. So what I mean by that is, if something does not work, we are able to catch it rather than actually building the system and the prototyping with some sample data or sample Ds. We really went to the live deals, live data, live contracts, and actually brought that entire project into a parallel mindset approach. That's one thing we really want to reiterate here. So when you're looking at a replacement strategy, think about how do you run your parallel run when your system is actually about to go live. That mindset was actually created between Enuit and the client. That was very key for us to run a successful replacement strategy. If we go back here, and then we just said, okay, I'm going to be taking everything from trade execution, not just trade capture, but I'm going to actually talk about execution, validation, all the way to contract management, shipping, delivery, and as well as cash flow in terms of settlements. So any deal type, whether it's simple or complex, in a fixed price or a priced complex formulas, because in the metals you have a lot of variability in the warehouses and the movement of materials, etc. So we actually picked up entire front to back and then tried to model them as a part of these test portfolios. So this way we are able to actually prove the system works, and they're able to model their exact simple trades, get the P&L, able to tie out the numbers from front to back, and started adding complexities as and when the prototype is solidifying. And then when it comes to actually the replacement, we are able to just only do a delta of a data migration and replace it. This is what I would actually want to share with you guys about what are all things which worked for us and what are all things which we learned from our CTRM replacement. Number one, which really worked for us is, like, I've seen in a lot of CTRM or ETRM replacements or any other projects before, the business case is written, but it never get actually tied back to the project execution by anybody else, right? So basically people will, some of these CTRM projects or ETRM projects are very long enough. So people don't go back and tie back why we started something and are we aligning to our original goals and principles. So this prototyping approach absolutely gives you one thing in control, is it gives you what gets measured gets done, right? And it is also give you a lot of pre-measuring, ongoing measuring of how the project is behaving. Is the replacement successful or not? If I'm having a new diversified set of contracts which I want to model it, let me test it up with the Enuit's N-Trade platform also. At the same time, I'm trying to fudge it into my existing legacy systems. So that approach of continuous measurement and the parallel run mindset was very extremely important for any replacement to work effectively. So in my opinion, these are all the four things we actually put it back as a benefit case, which we tied back when the system went live. Number one is, since we took a parallel run approach, there was less surprises and rework and configuration during the UAT, the user acceptance testing, and the real parallel run, which was very, very minimal. The second thing is, since we actually started modeling the live contracts from front to back, all the way from a deal capture, validation, all the way to settlements, it is much more easier for us to resolve the issues within that small iteration rather than actually, kind of your defect gets blown up at the later stage of the project. And throughout this part, stakeholders are very well informed. Hey, I'm going to model one of your copper contracts. I'm going to model one of your complicated iron ore contract, and this is what we're going to do it. And then the people who are different traders are actually involved in the project, so they actually got familiarized with the system as a part of replacement. So that actually helped us in terms of minimizing the number of training which we need to do at the time of UAT and at the time of go live. And as like any other good principle, we actually kept a lot of scorecards in terms of, the clients came back and said, I would like you to model 20 to 25 unique set of contracts front to back. Unique things we do with this because of certain things. There is a prepayments here, there is a provisional here, and this is more of a back-to-back, and this is more of an inventory-based sale. A lot of these nuances are upfront discussed with us when we actually start trying to do prototyping. So that way we are able to get a holistic set of what actually the business trades on a daily basis, where is their maximum volumes coming from, all of these pain points, which usually in a CTRM or ETRM project you find out a bit late in the game. We are able to find this out much earlier in the game because we just said, okay, begin with an end in mind, and you give me anything, I would like to run it through between front to back, which means datas, reports, cash flows, logistics, settlements, everything front to back, and we are able to check off each of those unique portfolios or unique bit of contracts. So that way it was extremely rewarding to see, if you take a prototype based on a parallel run based approach, how it can actually help you and you make your replacement much less painful. I would not say simpler, I would use the word less painful. The question I always ask, I'm sure everyone in this call is I've been in a business role or in a consulting role, or actually been a user, or actually like Gary being a market expert. The question, it is very, very unique to any replacement strategy, is the team or the clients you're working with is ready to measure the system after it's go live, or they are ready to measure the system when it is being built upon, because the cutting twice can be very, very expensive. I think that's what I want to leave my thought, and that makes to my end of a presentation actually. So that worked for us, and we are actually repeating the same approach in a couple of other clients too, who are actually looking at replacements and talking to us.
All right, well, thank you very much, Ganesh.
No worries.
I'm going to open it up now for any questions. If anyone has any questions, please feel free to just type in the questions section, and I'll happily ask either Gary or Ganesh those questions. I do have a few that came through already, and I think this is mostly going to be for yourself, Ganesh, if I look at them.
Sure.
It says, what were some of the lessons that you learned from the CTRM replacement?
I think I think I kind of covered it, but I just want to say that from a replacement strategy perspective, you got to really think about the entire replacement, like, okay, how I'm going to execute my parallel and retain my legacy or my existing product towards the end-trade system. So that mindset is definitely has to be keyed in between the choice of your vendor as well as your business teams. The second thing is, whenever people are actually trying to replace a system, it is always there is always an element of saying that, hey, I'm going to make some investments again right now. Do I need to re-engineer my process? Can I actually get something more fancier? That eagerness of the users is always welcomed in any replacement, but you just need to really take a hard look at it, saying that, am I replacing the system, or am I actually redoing my entire business process redesign? I think the striking the balance between system replacement and a business process re-engineering is very, very key, because you could actually cross the line between a replacement strategy versus an implementation strategy, and then your budget could blow up. I would just say parallel run and really looking at what you really need and why are you replacing, and tying back to the business case are the key lessons learned, especially from this client, which we really learned as Enuit team too.
Okay, thanks. I have two more questions that have come in. I'll ask the first one again to you, Ganesh, and then the second one to you, Gary. So this one was, do you recommend automated testing for regression testing? And if yes, do you have any recommendations?
I think I'll take that question, sir. So one of the things from a replacement strategy is, right, tying back the numbers. Absolutely, right. If the client infrastructure allows automated testing, what I mean by that is BDD, business-driven testing. So there are a lot of tools in the marketplace like SpecFlow Plus, which actually can connect, and we use that for our internal product testing. We have actually recommended to some of our clients to actually create their own test cases using these tools. And then that way, when you're doing a lot of reconciliation and running your end of day comparisons and everything else, automated testing would be absolutely helpful to actually do a business-driven testing, and facilitates a lot of time saving for the risk team to actually do reconciliation and then explain the numbers.
Right, thank you. I'll leave it. I'm going to ask one more question, and we'll keep it under the 40-minute mark. Gary, I'll see if you would want to take this one. It's regarding CTRM replacements once again, and it says, what preparation do businesses need to do if they go down the path of CTRM replacement, either from a legacy system or third party, or I think it says COTS products. I'm not too sure what that is there.
Looks like COTS, commercial off the shelf. Yeah.
Commercial of the soft products. Okay.
Preparation, you need to do a lot of preparation. You need to, first off, decide what you're trying to replace it with, not in terms of the actual solution itself, but in terms of the top 60, 50 requirements. You need to identify the people within the business and make sure that they're free or relatively free in order to participate in the project. And those people are always going to be undeniably the most important people in the business. So there's always going to be a conflict. So you're going to want to make sure that you have management commitment to what you're trying to do. I think that culture is also very important. So I think it's key to basically make sure that everybody is on board from day one and put a lot of effort into internal marketing of what you're doing, why you're doing it, and what the benefit will be, because people do commit themselves to the existing solution, and sometimes they can't see the woods for the trees when they're looking at something new. I think you also need to emphasize that what you are going to is something that you will build on into the future and may not represent the past. What I mean by that is that you will try to look at business processes that you need, that you don't need. People fall into a trap in replacement projects whereby they will hire an expensive outside consulting company because they've already got a list of requirements that they've developed over multiple selection exercises, and they think that this is going to help them. But in fact, usually that's not a good idea, because a lot of those requirements are not necessarily what you need, and you can end up selecting something based on somebody else's requirements, which is not what you want. So I think you've got to put a lot of effort into the preparation. You've got to do a lot of cultural thinking. You've got to get people on board, and I think it's a very political thing. Involves a lot of internal marketing. And if you don't do all of that, then you're setting yourself up for failure before you even look at the first potential alternative, in my opinion. Other things that you've got to do, I think Ganesh talked about. You've got to consider what you're going to do with your data, what you're going to do with history. Are you going to convert everything and run everything on the new system, or are you going to retain the old to run prior periods? What's the strategy going to be there? And that's going to depend on a number of different issues around cost and also around convenience and agility, that kind of thing. So those are some of the things that I think you need to consider. There are others, of course, but I think Ganesh covered many of the key ones.
Thanks, Gary.
Excellent. All right, well, I'm going to call that a wrap then. Thank you very much, Gary, and thanks, Ganesh. Once again, if you do have any other questions, please feel free to reach out to either Ganesh, as you can see his email address is on the screen right now, or Gary Vasey, I think gvasey@comtechadvisory.com. And at that time, I'm going to say thank you guys and have a great rest of the day.
Thank you so much, Mark. Thanks everybody for taking time.
Cheers. Yeah. Thanks a lot. Bye.
Thank you. Bye-bye.